Why will XRP take the place of Ethereum or even Bitcoin? It is also in a power struggle with Ether, on which cryptocurrency will be the most well-known altcoin. Hey insiders, welcome to our channel Financial Insights, the place where you are always a little bit smarter and wiser after seeing one of our valuable videos, so you can develop your financial knowledge. Don't forget to press the like button and subscribe to our channel so we can make even more financial content. In today's video, we'll look at why we believe XRP can exceed and replace Ethereum's 2,500 price point. And now we're seeing encouraging signs all through the market, especially for XRP. Are you thinking about what will happen next? The answers to these questions can be found in this video. From the outside, it seems that the cryptocurrency investment world is confined to Bitcoin. Bitcoin, the very well-known cryptocurrency, is the capital structure and investor traction chief. However, there are many other choices for those looking to diversify their portfolio and play with coins that give a unique perspective on the idea of digital currencies. One of them might be Ripple's XRP. In terms of overall market capitalization, the cryptocurrency listed fourth in March 2021, trailing Bitcoin, Ether, and Binance Coin. Let's take a closer look at what sets XRP apart from Bitcoin and other common digital tokens. In this video, we'll also take a quick look at some of the reasons why we believe XRP would outperform the price of Ethereum and even Bitcoin. Then we'll look at some additional details. Some of it you've seen before, some of it you haven't, so please bear with us as we progress. We believe that what we can gather from this, at the very least, is that XRP is extremely strong. We'll discuss and observe to see if any of it comes true. Now on to the topic at hand. Bitcoin is a digital currency designed to be used as a means of payment for goods and services, and therefore a legal tender. Although Ethereum is a decentralized open-source blockchain technology, it is also home to digital currency, global payments, and technologies, all of which are interconnected within an ecosystem that allows for the creation of decentralized applications with smart contract functionality. Ripple, on the other hand, is a money-settling digital currency and remittance mechanism designed for banks and payment networks, but it may also be referred to as a payment method or legal tender. The Ripple protocol was created to have a system for direct division of funds such as money, gold, and other tangible assets that settles in almost real time because it is cheaper, more straightforward, and a much more reliable alternative to transfer systems used by banks today, such as the SWIFT payment system. So, before we go any further, let's take a quick look at Ethereum's Ether token and Ripple's XRP. Ethereum was established in 2015 and is considered the first cryptocurrency when it comes to altcoins, decentralized applications, and smart contracts. Initially proposed in 2013 by Russian-Canadian programmer Vitalik Buterin, development began in 2014, and the system came into effect on July 30, 2015. Ethereum, like Bitcoin, employs the proof-of-work verification system, which is based on the mining method. Currently, Ethereum has a circulating supply of approximately 115 million Ether, and Ethereum miners, or users of supercomputers running software, use their time and computing power to process transactions and generate new blocks in the same way as Bitcoin does. Advancing to XRP, Ripple debuted in 2012, 3 years after Bitcoin. It was created by a company named Ripple Labs, which is located in the United States. The aim of Ripple is to develop a payment system that banks could use to move funds both nationally and overseas. The financial services sector is Ripple's target market. Anyone can buy and sell Ripple's XRP, and the Ripple blockchain, like Bitcoin, does not need third parties to validate and check transactions. However, because of its much faster transaction speed per second, Ripple allows its users to obtain funds on a peer-to-peer basis. There will be a total of 100 billion XRP tokens, with an existing circulating supply of approximately 60 billion. Moving on, let's take a look at the technological requirements of these two cryptocurrencies, Ethereum and Ripple, and see where they stand and which one of these digital assets will have the overwhelming advantage in the future. Discussing Ethereum when you want to transfer funds to another individual using the Ethereum protocol, the Ethereum blockchain takes about 3 to 5 minutes to process the order. Of course, this is all factors being equal, and by all things being equal, we mean when you use the maximum QUE or transaction charge for that particular transaction. Since all exchanges on the Ethereum blockchain have an optimum and varying service charge based on factors such as time of the day or network traffic, and during bull runs when everybody is trying to get involved with its token. However, when it comes to transaction speed, Ripple outperforms Bitcoin. When transferring XRP from one wallet to the other, the transactions are validated in a matter of seconds. When it comes to transaction speed, this makes Ripple a much superior alternative. Another noteworthy point is the transaction cost, which, as previously mentioned, rises as the network becomes busier, with the average transaction fee of Ether rocketing during instances of data traffic, as was the case during the 2017 through early 2018 crypto boom, when its price soared to about $3. When it comes to transaction costs, Ripple is virtually free, with the standing cost of just 0.00001 XRP to make a switch. Even though XRP hit an all-time high of $3.50 in January 2018, the transaction fee would be 1/100th of a cent. In the real world, it's almost insignificant. In terms of mining and circulation, Ethereum employs a proof-of-work method, with mining being an important part of the verification process. While all XRP tokens are pre-mined, there will only be 100 billion XRP tokens ever created. As a result, XRP mining does not take place in about the same way that Bitcoin mining does. Both of these tokens have a unique crypto coin release mechanism. Ether tokens are distributed and introduced to the network when miners discover them. A smart contract, which regulates the releasing of XRP tokens on Ethereum, triggers the flow of Ether tokens. Network miners are rewarded for each new token mined, as miners must solve complicated mathematical functions beginning with a list of desired hashes based on the complexity of transaction validation. Instead of the cryptocurrency mining method used by Bitcoin and Ethereum, Ripple's XRP validates transactions using a special distributed consensus mechanism through a network of servers. The servers or nodes on the network decide on the legitimacy or credibility of a transaction by conducting a vote. This allows almost instant confirmations on a blockchain without the need for a central authority or a number of third-party validations, allowing XRP to remain decentralized while still being faster and more secure. Experts forecast that the cumulative cryptocurrency market cap would reach $5 trillion this market cycle. There is also speculation that XRP will achieve significant gains during this entire period. Some predict that its price will reach $10 by the end of the year, while others predict that it will reach $200 or $300 by the end of the year. Nonetheless, some ardent XRP supporters believe that XRP would reach $589. An even more bullish XRP will replace Ethereum's current 2,500 mark in the short to medium term. Is this really true, guys? Other forecasts expect that the value of a single XRP token will rise to 200 or 300 in the next 10 years. They also say that Ripple will benefit because the expected price increase of its native token, XRP, will result in less uncertainty. According to another source, experts agree that the network's success enabled investments from businesses and financial institutions, as well as penetration into mainstream media. There is no question that Ripple will expand in the short, medium, and long term. If this happens, it would be absolutely mind-boggling for XRP. In general, Ripple provides security since it intends to issue a limit of 100 billion XRP tokens, which will be regulated by an intrinsic smart contract, with a current circulation of approximately 60 billion. Any unused XRP in a given month will be transferred to an escrow account, a process similar to token incineration during a Bitcoin transaction. That means there will be no exploitation due to an oversupply of XRP tokens. While Ripple works in a more complex manner because of its faster loading times and lower transaction fees, the Ripple system outperforms the Bitcoin network. BTC, on the other hand, is more widely used and recognized than XRP, giving it an advantage in other respects. Bitcoin is still a completely public system that is not operated by any single person, organization, or government. Although decentralized, the Ripple network is owned and managed by a corporate company of the same name. Despite the fact that they both have their own cryptocurrency tokens, the two famous virtual systems serve different purposes. Please note that nothing mentioned in this video should be seen as financial advice. Please do your own research before investing. This video is made for educational purposes only. Please let us know in the comments below what are your thoughts on XRP. Thank you for watching and make sure to subscribe and check out our other valuable videos. See you soon at Financial Insights.